We buy or sell the Singapore dollar versus the Japanese yen pair. First off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So, this pair is 27% from the 52-week low and 1% away from the highs. Let's jump right into the charts. So we start with the very big picture, weekly data points, and we can see that there's been some relatively reliable time cycles. So let me draw them in with my handy time cycle tool. So you can see that these are some pretty darn good time cycles. Rise, decline, rise, decline, rise, decline, rise, decline. Almost looks like you can print money by following these time cycles. The time cycles suggest that we are very overdue a correction that will lead all the way into late 2023. And these are some pretty darn good time cycles as well. You could certainly make the case that the current worldwide economic and political situation is completely without precedence in this time frame we are talking about. Hence, that could definitely have an effect on the time cycles. Then again, these were very clean time cycles. These phenomena are rare, and when they work, they can be very beneficial. What we see here when we zoom in is that we are very high. We have seen just an obscene rally, a strengthening of the Singapore dollar on the dailies. We are seeing some rejection here in the candlesticks. We see that during previous rallies, like here and here and here and here, when we have these corrections, we usually test the green 50-day moving average or even the blue 100-day moving average. So those are like levels where if we were to go down there, it would be a meaningful move in the forex market. Looking at the weekly data point MACD, RSI, PPO, we are at extreme levels, very, very, very rare. These levels are usually followed by some pretty significant pullback. The previous time we had this PPO, red PPO here, we got a very substantial mean reversion. It actually began the major declining phase of that previous time cycle. Going to the daily data points, we see that previous pullbacks short term usually pushed RSI down into the 45-ish territory. So there could be more downside here for this pair. In my notes, I write overbought. I give a -5 on the technicals, and the time cycles in big picture are bearish. Let's look at some seasonality. So to the right, we have the clean pair seasonality. And we see that the seasonality is very much bearish for the Singapore dollar all the way into mid-December, which is interesting. To the left, we have the Singapore dollar against the US dollar. We can see that over the last 5 years, November is a bit weaker than October, but December is, however, very strong. Over the last 10 years, let's get the 10 years like that, we do see that November is suddenly weak, but then December does come with a vengeance over the last 20 years. So November is more bearish than bullish. December, however, is one of the strongest months for the Singapore dollar, but then January is mediocre. Some macro news here on the 27th of October is going to be the Bank of Japan interest rate decision. The forecast is minus 0.1 plus 0.1. I think I will give a -5 here on the seasonality. It was a bit messy, but overall it is more bearish than bullish. I will give a -2 here on the fundamentals. I can't talk that much about the fundamentals because if you talk about politics and the current geopolitical situation, it's not really that popular in terms of the algorithms. I do see that when I upload my the videos where I talk about forex. They take a much longer time processing, and that is in all likelihood because I use trigger words in the video, like I talk politics, geopolitical. Those words, they do make the algos analyze a lot more carefully. Let's look at relative performance. We start with the weekly data points, which reflect the big picture. 42% positive correlation between the currency pair and the S&P 500, minus 32% with the EWS, which is the Singapore stock market ETF. It is interesting to see that when the Singapore dollar strengthens, it usually is bearish for the ETF. Then again, the ETF is denominated in the US dollar, but it's a bit of a quirky relationship. Minus 27%, so very similar negative correlation with the Japanese stock market. So very quirky correlations there. 77% positive with the dollar index, so that's interesting. On the daily data points, we can see a minus 74% with the S&P 500, minus 81% with the Singapore stock market, and minus 90% with the Japanese stock market. So very intriguing correlations for sure. Given that long and short term, the clearest correlation we did get was actually with the dollar index. It was a very positive correlation. So what is good for the dollar is good for this pair. The thing is that I did analyze the dollar index in a bit more detail in the first video for this week, the video that is about China. So go to that video to get more of an in-depth analysis on the US dollar. Long story short, there's good reason to expect a bit of a pullback for the US dollar, possibly actually a longer term consolidation. Given that we do have the positive correlation though with the dollar, it also means that if we see some deterioration in the strength of the dollar, and the strength has been obscene, so if the dollar were to weaken, it would still be from a very high level. It's sort of like if someone has a very high pulse and it goes down a bit, still it's very much above the average. So it means that it would be bearish then for the Singapore Japanese yen pair. Looking at these two together, we see an interesting pattern nonetheless. We have pushed into this very clear resistance zone. There is some pressure there. We haven't seen a breakout yet, so this is just something to have a bit on our radar. On the dailies here, you can clearly see this resistance level on the RSI as well. The upper end of the RSI is just a very clear level of rejection. Lower end of RSI is very viable. So these two are relatively easy to trade. Looking at the seasonality, we see some very clear weakness into early January of next year. So I'm going to give the bears a -3 here on the relative performance. We do end up with a -3.8. The key interest signal is simply that we are very much overbought, very much due, quote unquote, a pullback. It could be a shallow pullback, it could be more substantial. Looking at the time cycles that were so squeaky clean, they suggest a very substantial longer term weakening of the Singapore dollar against the Japanese yen. It's important to be aware that this is the forex market, and these are relative relationships. Both Singapore and the Japan have very sophisticated economies and societies. So yeah, it's all relative, basically. So if the Singapore dollar were to weaken, over a longer term period against the Japanese yen, it does not mean that Singapore is going to turn into Mad Max. So we have some time left. So let's run through a bunch of interesting stuff. Something that piqued my interest for sure this week was the natural gas futures. So previous week I made a video about the green 50 week moving average as a support. Clearly the bearish smashed through it. But the bears then created an even more interesting situation, and that is with this blue 100-week moving average, which has been very good support in the past, very, very buyable indeed. Um, so this is definitively a very interesting development, and these are the types of moves you want when a thesis doesn't work out. It's a great thing to have a support level fail clearly, but then right afterwards you're given another support level. That is much better than averaging down. Averaging down is a terrible thing. It's much better to just have a stop below the support level. So if it fails, you are stopped out quickly. But then you will then have an opportunity to get in at an even better level if you get it. And I think that this is just too interesting. The situation around natural gas now is just it's there's so many factors that are bullish. Uh, when you have these moves, though, especially these massive candlesticks, it's because there is a bit of a surprise to the market. So quite a few of these sellers were most likely also people who were betting on higher prices, who sort of like were panic selling as well. But yeah, I did myself put on a bit of a speculative position here at that 100-week moving average. It's just too interesting, but I do feel it's a bit gamblish in the sense that the situation here is a bit messy, and there seems to be chaos now in the market in terms of how we are going to interpret the situation. Um, yeah, it's just the way the market is. There will be these weird, well, seemingly weird situations, uh, but that is because people are investing based on assumptions about the future. So what you are seeing now is not what people think about natural gas prices this week. It's about some obscure time in the future, and it's very hard to know what specific date this reflects. Yeah, it's a mess. When it comes to the topic of energy, let's look a bit at uranium. Definitely being in the news, but looking at the chart here, it's messy. It's what to do. There's resistance level. There are some support levels. Looking here at the dailies, you have resistance from the blue 100-day moving average in blue. You have some horizontal-ish support levels here, but it's just a noisy chart. While we are on the topic of energy, let's look at solar. Solar it's pulled back to an interesting level, but we don't have like very clear buy levels. Looking at these wicks here, you see that the bulls have previously come in here to buy, so there seems to be like a level of interest horizontally here. So I am putting this one on my bull radar, but it's I don't have yet the signal to like pull the trigger here. On the dailies, you see something very similar. Bulls have reacted here, but then again, we do see in the last weeks that the bears have pushed us lower as well. Let's look at Spotify. I'm a Spotify customer. Doesn't seem like my subscription has helped out enough, at least. Close to all-time lows here for Spotify. That's tough. I mean, imagine being like an executive at Spotify and seeing these share prices. That's tough. Like if you got, imagine getting shares here and then you are like down like 76%. That's tough. Um, we are at low levels. I do think that this is a great company. I mean, they have a great service. But we don't see that greatness in the chart. From a long-term perspective, these charts they do pique my interest. Um, then again, yeah, I do also prefer to have green numbers in my account. So that's why when I put on a position, I also want to simultaneously put on the stop such that I will be able to get out when I want to. Before any small loss becomes big. I would much rather attempt to buy Spotify, 4 times for 4 very good reasons, instead of buying one time and then averaging down and getting into like a messy situation. It's just not worth it. Always use stops. And divide your total planned position into multiple components, because if you buy like one big one and then you start to like add later on, yeah, that's how you can get those big red numbers.